Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the New Zealand dollar because on the current week we have decided to not prepare the intraday daily update on the gold, since the action on the gold in the previous week was not really significant, and in fact it doesn't need any update right now. So all that we have said in our recent daily video on the previous week and the weekly research is absolutely sufficient view, and it hasn't changed significantly since the previous week. At the same time, on the New Zealand dollar, as we said yesterday, it's really interesting short-term setup and market showing the progress with this setup. So I think that it will be more interesting to take a look at this issue on the New Zealand dollar, and in fact this setup led us to trade immediately. In fact, to be honest, our trade has started on the Friday already, because market has reached the level that we have specified for the taking the long position. Although I do not know whether, guys, you have taken long or not, but this level has been hit, and right now we already have the long position. Now we need to see what will happen next. At the same time, not upset if you have missed this entry, because still on Monday you will have the chance to take the position. Because it's not lost everything yet on the market, and the market has the pretty much room till the target. So just to remind you the background of this trade, on the daily time frame chart we have market at the support area. So you can see that market has hit the daily result and has formed huge, nicely looking morning star candlestick pattern. And if you will take a look at the weekly chart, you will see that this morning star pattern also is the bullish step grabber that has been formed here. And theoretically, this pattern suggests the taking out of this step. But we, if you remember, on Friday we have decided that we will use not the grabber itself for the profit taking as the target destination, but we will base our trade on this pattern and use ABCD pattern is the target that is based on this morning star. This is absolutely common approach for trading of the candlestick patterns. So if you ever trade the candlesticks, you probably know that when the market has been, when the pattern has been formed and stands in place, traders usually wait for some retracement inside of the body of this pattern. That's absolutely a common practice, and this happens almost every time when the market forms either hammer or bullish engulfing morning star patterns. It in most cases show the minor retracement or some retracement inside of the body of this pattern, and traders use this dip for taking the long position if they intend to trade this pattern, as we do. So here we have the pattern, and here we have retracement inside of the body. That is what we have said on Friday. Also, guys, this level on the previous week was the weekly pivot support one, and what is more interesting is that this is the 618 target of our former A, B, C pattern. So that's the minor extension, 618 target. Recall, I don't know whether you remember or not, but in the weekly research that we have prepared on New Zealand dollar in the end of the February, we have suggested this downward action, and the pattern that this action is based on is Gartner's 222 sell. So that is downward action, ABCD retracement. Here, if you will drop to the 4-hour time frame chart, you will see it much clearer. ABCD retracement, and that's extension. So market right now here has reached 618 extension target. So Now we take a look at the 4-hour time frame chart. That's most interesting and important for us. On the 4-hour time frame chart, on Friday we said that we should keep an eye on this ABCD retracement down. Since market has formed reversal swing, that's a reversal swing because take a look, that's this first swing to the upside that is greater than the previous swing down. That's why it calls a reversal. When the market forms reversal swing, in most cases it shows compounded downward retracement. Usually it takes the shape of the ABCD pattern. This happens because the previous bearish momentum forced market to not just show minor retracement of the V shape or just one leg down and go, but the previous strength of the bearish momentum forces market to show deeper ABCD retracement. That's why on Friday we said that we should keep an eye on area of agreement between the 618 support, between the 38, maybe 50% support here, 73.45 area, and completion point of this downward ABCD. But we look at this pattern on the daily chart. Oh, sorry, on the hourly chart, because on the hourly, just better, this ABCD looks better and clearer. And that has happened. So you can see that market has reached this area, completed this ABCD, right at the 50 support. So that's some sort of the agreement. Maybe you could use the 50% level. Anyway, that's an area that we have set, 73.25, 73.45 area. That's area we have specified on Friday for possible taking the long position. And this is the final point in our entry tactics. So market has formed patterns that let us to take the long position. These patterns are side by side two bullish stop grabbers. That's the first grabber has been formed, and here is next one. Again, bullish grabber. These grabbers suggest the taking out of this stop as the minimum target. But since this top stands very close to the 618 extension of this A, B, C bottom pattern, we will use as the minimum target is 74.65 area. So if you guys haven't taken the long position here on Friday, you have pretty much room for taking this position. And you haven't missed anything yet. So the trade is just has started, and you could join this upward action. That's the minimum target, but we can't exclude also the chance that market could move for us 100 pips higher, right to the 100% extension, 75.65. If market will totally complete this A, B, C, D pattern, that's also possible. But we do not dare to pretend on this extended target yet, because that's just more realistic and more probable. Now about the former analysis. So on the weekly chart, on the end of the February, we said that market has formed here bearish grabber, and here as we see that bearish dynamic pressure, and said market should taken out of these lows. But this hasn't quite happened yet, and market conversely has formed the bullish grabber that suggests taking out of these highs. Well, guys, we currently do not know whether this will happen or not, whether market will taken out of these lows. But if it will not to do this, this will happen not due this upside action. Because take a look, if even market will complete it totally, this ABCD, this upward action will stand and remain inside of this former downward swing. And this upward retracement will not change the balance of the forces on the New Zealand dollar, especially on the weekly chart. And that's even more the truth if market will complete it just the 618 retracement. That's why this upward action is just a tactical short-term setup. It doesn't change the overall situation on the weekly chart, and this is absolutely possible when the market will complete this retracement and will form then some sort of the A, B, C, D down and will take it out finally the lows. That's really could happen because if you know, on 17th and on 18th of the March, so will be the Federal Reserve meeting, and if the comments from the Miss Yellen will be hawkish. In this case, we really could get the downward acceleration. So from the perspective of the Fed meeting, we could treat this upward retracement as the closing of the shorts position and contraction of the position to minimize risk, and downward acceleration here, if hawkish comments will follow, we could see that reestablishment of the bearish trend. That's one of the reasons why we call for using just this target. Now, it will be nice if market will continue to move here, but we think that this target is more acceptable and more reasonable. That's our view on the New Zealand dollar. As you can see, the setup is really interesting. And what is more important is that this setup is really clear.